All right, let's talk about it. We are going to decode one of the most fundamental and, let's be honest, one of the most confusing parts of learning accounting, debits and credits. And trust me, if you've ever felt like they just don't make any sense, you are in exactly the right place. Because this is the question, isn't it? It's the one thing that trips up almost everyone when they start. You've got your debit card, you think, debit means money leaving, but then you get into an accounting class and suddenly the rules feel like they're from some kind of bizarro universe. So, what is going on? And look at this, you are so not alone. This is a real post from someone on Reddit trying to learn accounting. And it just hits the nail on the head, right? It captures that feeling of total bewilderment. It seems like the rules are the exact opposite of what they should be. Well, today we're going to solve this. So, how do we crack this code? It all starts with the single most important idea. And if you get this, everything else will start to click. In accounting, perspective is everything. The confusion almost always comes from looking at a transaction from the wrong point of view. Here it is. This is the big secret. That bank statement you get, it's not actually written from your perspective. It's a record for the bank's own accounting. So when you deposit money, you think, great, my money went up. But the bank thinks, great, we now owe this person their money back. For them, your deposit is a liability. And this right here, this is the aha moment. Let's break it down. You deposit $100. In your company's books, your cash, which is an asset, goes up, and an increase to an asset is a debit. But over on the bank's side, that same $100 is a liability for them. It's money they have to give you back on demand. And an increase to a liability is a credit. Your asset is their liability. That's it. That's the whole reason it feels backwards. Okay, so now that we've hopefully cleared up that whole bank confusion, we can finally move on to the actual beautiful logic of accounting itself. It's time to build this thing from the ground up, the right way. Okay, I need you to do something for me. You have to let go of your everyday definitions of these words. Seriously. In accounting, credit does not mean good, and debit does not mean bad. And as we've seen, they don't always mean increase or decrease. Trying to use those old definitions will only keep you confused. So let's strip it all back to its true meaning. It is way simpler than you think. A debit is just an entry on the left side of an account. A credit is just an entry on the right side. That is it. Full stop. Think of them as directions, like east and west. And here's why those directions matter. Accounting is built on this elegant 500-year-old system called double entry bookkeeping. And the core rule is that for every single transaction, the left side entries must always equal the right side entries. It's a self-balancing system that keeps everything in check. Now, the whole point of this balancing act, the whole reason for debits and credits, is to make sure this one fundamental equation is always true. Assets equals liabilities plus equity. Everything a company owns must be equal to its debts plus the owner's stake. Debits and credits are just the mechanics that make the magic happen. So how in the world are you supposed to remember which accounts go up on the left and which go up on the right? Well, a lot of people turn to a popular mnemonic to get the hang of it. It's a handy tool, but as we're about to see, it's also a little controversial. And here it is, DED CLICK. It's a simple little memory aid. DED stands for debit to increase an expense, asset, or drawing account, and CLICK stands for credit to increase a liability, income, or capital account. For a lot of students, this is their go-to shortcut. But then you have the other side of the coin. Critics, like the folks over at Accounting Cafe, argue that these kinds of mnemonics are basically a crutch. They say it lets you memorize the rule without ever understanding the reason for the rule, and that stops you from ever really truly getting it. So, is it a useful tool, or is it a learning trap? You know what? Let's put the mnemonic aside for a minute and just apply the core logic to a real-world transaction. Let's see how it actually works in practice. Okay, here's a super common scenario. Your business needs new equipment. Desks, chairs, computers, worth $10,000. But you're not paying cash for it right now. You're buying it on credit, which just means you promise to pay the supplier later. So what's actually happening here from an accounting perspective? Two things are changing. First, your company is getting an asset, the office equipment. That account is going up. Second, your company is also getting a liability. That's the debt you now owe, which we call accounts payable. That account is going up too. And this is what it looks like in the books. To show the increase in your asset account, office equipment, we make a $10,000 entry on the left side, a debit. Then to show the increase in your liability account, accounts payable, we make a $10,000 entry on the right side, a credit. See? 10 grand on the left, 10 grand on the right. It balances. The equation is safe. Whew, okay, so after all of that, what are the most important things to walk away with? Let's boil it all down to the absolute essentials. Here are your 3 key takeaways. Number 1, that weird backwards feeling. It's almost always because you're thinking about your bank statement, which is from the bank's point of view, not yours. Number 2, keep it simple. Debit is left, credit is right. That's all they are. And number 3, everything we do is to keep that fundamental accounting equation in perfect balance. And that brings us back to our final question. Now that you actually understand the logic behind why things work the way they do, what do you think? Is a mnemonic like dead click a helpful shortcut to get you started, or is it a harmful crutch that actually gets in the way of real learning? It's something to think about.